Let's continue to take a closer look at Amazon's report with Rohit Kulkarni from Roth MKM. Rohit, good to see you. So AWS growth, 17.5%. We got some extra detail from Microsoft on Azure's overall growth. How does AWS's growth and the operating income at $10.2 billion look to you in terms of share and competitiveness with the others?
So AWS has been the leader, as you know. They've been, as the prior speaker said, they've been caught a bit flat-footed on how to take advantage of the AI cloud, AI compute, and AI inferencing theme. I believe they are playing catch-up, and the slight acceleration of a very large base is encouraging, in my opinion. The acceleration from over the last couple of quarters that we are seeing, and we see that to be sustainable. And this is a company that generates, AWS generates more than 30% of margins. So market leader, accelerating revenues with market-leading margins. I think that's an encouraging sign. And for the first time, we saw AWS coming in slightly above expectations. So perhaps the AI cloud layer is starting to show up in the numbers, and that's what we would like to see on the call.
Okay. Tell me your sense of where we are for investors who are trying to see who's getting a better business built in AI in the cloud. My sense is the product's still being built. They're trying to, the different hyperscalers design chips that allow them to more efficiently get these jobs done that customers are demanding. Are we yet able to see how that's panning out, or are they still making adjustments as they form these relationships with the various model makers and build the products?
I think we are still in learning and building mode, almost comparable to where we were with 2012 when it came to internet cloud. So we are still very early as far as which products, which tech stack, which category of completely vertical tech stacks and in-house silicon versus NVIDIA GPUs, all the various combinations of pricing and product and offerings, they're just coming together. And the big three, which is Amazon, Google, and Microsoft, are rushing to put out products to help AI labs be their exclusive partners. So I think by sometime early to mid next year is when we'll actually see probably more compute, more demand for these data centers being built as capacity constraints start to perhaps reduce over the next 6-9 months. And that's where the CapEx comes in. It is a $32 billion CapEx quarter, which is a $120 billion run rate, which is a massive, massive number. That gives us confidence of revenue in the future.
Yeah, so Rohit, when I think about Amazon, I think about a company that over the years has at times sacrificed profitability to reinvest into itself and disrupt itself and disrupt and reach out into new markets too. So when you do look at this CapEx number that for the quarter came in so much higher than street expectations, and you do look at some of the details around free cash flow and margins in the guidance, is this just another iteration of that for Amazon?
In my opinion, I think this new era of Amazon that we are in is where they're balancing profitable growth, unlike where Meta has entered right now. Meta almost feels like it has entered into that era which was comparable to what Amazon was in when people cheered when they missed earnings. Today's Amazon's era is almost where they are generating sufficient amount of cash. It is the stock can be bought on earnings, and hence we would be very surprised if next year's earnings or some of the profitability metrics come in below expectation and they shift gears into investments at all costs. I think the company has enough levers right now as compared to 10 years back that they can balance profitability in a certain pile of business and invest in another pile.
Okay.